Will our government relax the ABSD ruling for foreigners? Definitely when millionaires are thinking about migrating to a country, they want to look at the cost of acquiring a property. Once we have that 60% ABSD, that is definitely a big impediment in terms of the restriction of me owning an asset in the country. Condos are going to go up to about 500,000 in 15 years' time. My own personal forecast is that it's going to look something like this, about 75,000 landed. 500,000 condos and apartments. HDB will increase by about 200,000. Condos and apartments increase by about 120,000. But important thing is to note that what is going to happen is that we're now entering into a new season, very similar to 2013, and you should take advantage of this because now all right, so we're going to do a two-part series on NOTG. This is part one on 2026 property market real estate update. All right, so these are the projects in the pipeline for the year 2026. There's quite a fair bit of projects coming on, so you're going to have a lot of choices when it comes to north, south, east, west, as well as central CCR location, RCR location. So a couple of very interesting projects that will come out. Do get in touch with us. If you want, you can drop us a DM, drop us a comment in the message box below, or you can just head on to basically our IG page or TikTok channel and drop us a private message, and I'll be very happy to send you via email to your email on this entire 9-page deck on some of the projects that are upcoming. All right, so let's have a look at 2026 forecasts. I'm going to do a two-part series to talk about what are some things to take note as we move into 2026. Now, there's a latest DBS market report that's been out. I would suggest that you get your hands on that. Later, I'll share with you in terms of some of the key insights. But let me, before heading on to DBS report, let's have a look at the latest Henley Private Wealth Migration Report 2025. So this has just came out this year. The last report, Singapore was ranked, if I'm not wrong, the 3rd position in terms of the overall net inflows of millionaire migration into Singapore. Based on the latest Henley Wealth Migration Report, Singapore dropped to 6th place for millionaire migration in 2025. Will our government relax the ABSD ruling for foreigners? Because if you look at this, we technically dropped to the 6th position. We loosed out, I think, specifically to countries that has really, I think, like more relaxation in their tax rules. For example, we have the 60% ABSD of residential properties. Definitely when millionaires are thinking about migrating to a country, they want to look at the cost of acquiring a property to own, settle down their family, not just to rent, but really to own. So once we have that 60% ABSD, that is definitely a big impediment in terms of the restriction of me owning an asset in the country. Naturally, they can look at commercial properties, they can rent residential properties, but residential is still at the heart of many millionaires because they want to settle down their kids and stuff like that, right? So we've dropped to the 6th position. We still have a strong 1,600 millionaire migration inflow. Estimated wealth is about 8.9 billion. So millionaire growth is about 62% on the last 10-year basis from 2014 to 2024. But in terms of 2025, we dropped ranking. We're still the top wealth magnet in the world. So net inflow is about 1,006. Reasons are the same, very stable reasons. Strong political environment, very fair, good governance. Strong healthcare system, good education system, very safe regulatory in terms of corruption level, very low. Safety on the streets is good. And of course, Singapore is like the top financial hub in the world. So of course, all this fintech innovation, wealth management services, these are great. And this is the 2040 next 15 years growth report by DBS. Very impressive report. You should read it. They talk about population, and population based on our own data. Basically, we're back on track. Now we're about 6.11 million. There was a white paper that was released 2013 stating that we might want to go towards 6.9 million by 2030. I don't know whether that will happen, but it seems that based on a year-to-year basis, that could be happening. So 2025, we had 3.66 million Singaporeans, PRs, 543,000, 1.9 non-residents, all right? So the white paper back then was that we might go to a 50-50 split with 50% Singaporeans, 50% non-Singaporeans, which comprise of PR and non-resident. Now, non-resident, of course, it comprise of foreign so-called residents in all spectrum, all the way from different work passes to high net worth individuals. Naturally, the tendency is that this group of population, 31%, they have to rent, which is also one of the reasons why, in terms of landlord-tenant kind of demand, is still very strong in Singapore. Rental rates has keep pace over the last years. Is still very strong in the market now, depending on what kind of properties you own at which location. And PRs, naturally, the first property, 5% ABSD, they will naturally tend to buy their first property. And of course, Singapore citizens, now we're at about 59.9% of the entire population pie. Now, what does this mean? When you look at this report by DBS, they forecasted that in the next 15 years, from 2025 to 2040, and we will be looking at about 1.34 million HDB public housing. We will be looking at 573,000 condos, apartments, and landed properties. Let's come to this screen. At this point in time, 2025, we have 73,000 landed. We have about 380,000 condos and apartments. We have about 1.15 million HDB. Now, based on this DBS report, in the next 15 years, by 2040, they forecasted 573,000 private properties, but my own personal estimation is that this will still be about the same. Maybe it will increase to 75,000 land plots, but it's not because of government land sales, it's because of subdivision, right? Meaning that developers buy up big chunks of or maybe one bungalow and then chop into two corners and one inter, or they buy one bungalow, chop into two semi. There will be incremental increment, and then this will largely be about 500,000 condos and apartments. So if you look at this, there's an increase of 120,000 units, which is quite according to plan over the next 15 years, because every year GLS increased by about 8 to 10K units. So if I take 120,000 divided by 15 years, that's about 8,000 units increase per year, which would then bring us to about 120,000 units more. In totality, we're going to see this go up to 500,000 to support the population growth, because naturally speaking, PRs, they have to buy private unless they are married to another PR or married to a Singaporean. And if they're married to Singaporean, they can buy HDB. If they are married to PR, both must have PR status for more than 3 years to buy a HDB resale property. All right. So this is basically the two graphs in accordance to median household income, continue 2 to 3% growth. But then, is it really 2 to 3% growth? Because based on what we've seen, we always want to note that when it talks about residential price index growth of 2 to 3%, that is a median overall reflection of everything combined. But when you look at real estate as an investment, we want to make sure what we are looking at. Because if you talk about landed properties, which is the strongest class, 2020, if I talk about the average landed property, inter-terrace, freehold, or 999 years, you can get a landed at $2.5 million. That was the year 2020. 2021, you can still get something at 2.8 to 3 million. 2022, you can still get something about 3 to 3.5 inter-terrace, and I'm only talking about freehold and 999 years. 2023, $3.5 million. 2024 is about $4 million. This year, 2025, you need at least 4.5 million to find a decent Cat 2 home, Category 2. So refer back to our past episodes to know what is our landed framework, Cat 1, Cat 2, Cat 3, Cat 4. And if you look at this, there's an appreciation of $2 million for an entry-level inter-terrace Category 2 that is livable condition. Maybe you need a bit of renovation. But then, for somebody that put in 25% down payment plus 5% buyer's stamp duty, averagely plus minus, that's about 30%. This is how much, all right? $2.5 million. You need to put in 750,000. If I take the gain in terms over your capital of this amount, this is no small figure. It's more than 200%. And naturally speaking, if you were to track what is going to happen from here onwards. 2026, my own personal forecast is that to get an inter-terrace, it will cost you 5 million. 2027, 5.5 million. 2028, 6 million. 2029, $6 to $6.5 million. There is a potential of $2 million growth. If somebody were to put in 30% here at 1.5 million, that 2 million over 1.5 million is still 150% return on capital. Gross. I'm not talking about property tax or whatever maintenance stuff. It's just gross paper margin. All right. So in terms of on the ground, if you take 150% growth divided by 4, this is definitely not 2 to 3%. This is very, very different numbers that we are talking about. It's at least 38% growth return on capital per year. So the 2 to 3% behaves differently across different properties. All right. So sometimes we want to make sure that whatever we see on data, we want to understand in terms of PPI, it is a gross total median. All right. So government seems also to be focusing back at CCR, because I think that in terms of decentralization, it has already really have a lot of progress over the last 20 years. If you look at Punggol Digital District, there's already successful implementation of hospitals around different OCR zones. Woodlands, there's a hospital. Jurong, there's a hospital. Yishun, there's a hospital. Sengkang, there's a hospital. In the east, there's a hospital, Changi Hospital. Center, of course, Tan Tock Seng, got Mount E and all that. And then, importantly, a lot of the international schools are now deployed at decentralized zones. For example, Overseas Family School used to be in River Valley, has been shifted to Pasir Ris. So these are the decentralization master plan, which I think is fantastic, because there's a lot of support node that's needed at the OCR zones, because those are where the majority of the population in Singapore is, at the OCR region, condos, HDB apartments, and all that kind of stuff. All right. So I think decentralization is already in place. Now it seems that government wants to rejuvenate Orchard and Marina, and really to make it the main rejuvenation of the city center. So these are zones that we can take note of. So as mentioned, condos are going to go up to about 500,000 in 15 years' time. My own personal forecast is that it's going to look something like this, about 75,000 landed, 500,000 condos and apartments. HDB will increase by about 200,000. Condos and apartments increase by about 120,000. But important thing is to note that landed will still be the main cream of the crop, because in terms of assets theory, on an economic term, if a price commodity does not increase in supply, naturally when people keep buying it and holding it over a long period of time, the price will only shoot up, because this is an inelastic supply. There's an inelasticity in the price to supply relationship. So price will continue to go up if the supply don't increase and more people buy into it. And we have to note, out of these 73,000 landed properties, there's a lot of old money that is stuck in it. Not just old money, that means legacy money. People that own it for the last 20, 30, 40, 50 years, they're going to pass it to their kids. Number two, there's also a lot of people sitting on profits gain. So for example, people that bought during COVID, they're sitting on a lot of gain and they have no rush to sell. And the holding power is strong because of the holding demographics here. And what is happening also is that there's another set of reports that averagely we're giving out about 22,000 Singapore citizenship to naturalized Singaporeans per year. I am very sure that the high net worth individuals within this category, once they get their Singapore passport, they will definitely start to look at landed properties as well. So this attracts a different demographics. It really attracts high net worth individuals. And because of this demographics that's holding to this type of property, it will make this type of property more and more priced. And that's a very important element to take note of. All right, so next, we are in what I call a post-harmonization era. I call this the first season after each shift of size regulation is usually one of the best opportunities. What do I mean by this? So there was a pivotal year in the year 2013, and a lot of people didn't realize that the market behavior changed. Now, how do market behavior change? Largely is based on the new type of properties that are being introduced by developers in the market. Developers are very sensitive to the absorption power on the ground, on the target buyers that will absorb their unit. So all developers, they are selling properties, all right? They are property developers. They are selling the properties. They have to make sure they adhere to regulation. There's a lot of risk that developers take. And of course, if they hold on to a property and they cannot clear everything after 5 years, they will be hit by ABSD, right? So naturally speaking, they will be very strategic in terms of architecture design, in terms of what is the regulation, in terms of what will be the buyer's absorption power on the unit mix, demographics, like should they make more 3-bedders, should they make more 4-bedders, more 2-bedders, or should they even do 1-bedders? So they have to adhere to the cooling measures. They have to see what is the behavior on the ground. They have their own research team. Now, what happened after 2013? Let's understand a bit of backdrop so we can understand what happens now. Is that 2013, if you notice, there was a shift in the behavior. Firstly, in the sizing of the unit. So in the past, the 2-bedders were huge. The 1-bedder were huge. 3-bedders were huge. But then after 2013, what happened over the last 10 years was that 2-bedders averagely now is 500 plus 600 square feet. There's some at 700 square feet. 3-bedders averagely 800-900 square feet. 4-bedders now is about 1,000, 2,003 square feet. All right. Now, this is because that year was so pivotal into TDSR that a lot of buyers' loans are restricted. Because TDSR, there were a few iterations as well. Now TDSR is 55% of your salary to calculate how much the max loan you can take. Tenor is being restricted. TDSR is restricting not just your tenor, your loan capability, your loan quantum, the debt that you have, to make sure that you don't over leverage, which is a good policy by MAS. And because of this, everybody's loan quantum shifted and dropped. And it became such a gameplay that quantum is more powerful or more important than PSF, because the banks loan you based on the quantum of loan that you can take. If your loan quantum is low, you cannot afford this kind of pricing, then naturally what developers will do, I will create smaller size. So it's always a combination of this. It's always quantum, size, and PSF. So since if I'm a developer, my target buyers, their quantum is restricted by the loan quantum. Because loan quantum takes up 75% of their loan, they put in 25% of their cash and CPF, and they have to pay another 4 to 6% buyer's stamp duty. So firstly, if this is not an issue, then the issue is naturally this. But if this is the issue, and it affects my overall quantum that my buyers can pay to absorb my units that I'm going to launch as a developer, then naturally speaking, if PSF is something I cannot control, because this is based on the land bid pricing, and I also have to win other developers to bid for land, and later we're going to talk about the land bid pricing situation now, then the only determinant now I have is to calibrate the size. Because I have to make sure that my size shrinks so that this can shrink. Because this guy is going up. This guy, the quantum affordability is affected because of TDSR. Then I can only make sure this thing goes down. And that was what happened, which is why now we enter into an era that you see properties that was being developed after 2013. Their 2-bedders are 500 to 600 square feet. 3-bedders is about 700 to about 900 square feet averagely. All right. This is a very classic example. Same project by Capital Land, Sky Habitat, Sky View. Both are fantastic projects, and we love Capital Land. All right. The speed of appreciation is a bit different because what happened was that Sky Habitat was built before the TDSR era. Fantastic architectural, beautiful project, top award-winning architecture in the world, and the cascading effect is beautiful. I love the project as well. The only thing is that because of the shift in size, they were caught in that era whereby they were large size, so it took a little bit more to see decent appreciation. But Skyview, the moment they was launched after the TDSR era, they calibrated the size to be small, and the owners here made faster gain because they took advantage of the quantum play. So Sky Habitat 1-bedder is 710 square feet. Skyview is 484 square feet. Naturally speaking, the amount of quantum is so important that the smaller your quantum, the more buyer audience is available to absorb your unit, because the audience is big at the base. So the moment you hit a high quantum, the audience is smaller. All right. And basically, These are the sizing of Sky Habitat and Skyview. All right. So before TDSR 2011, they were launched. Skyview was 2013. And as you can see, one beta, Sky Habitat is 710 square feet, Skyview is 484 square feet. Two beta, Sky Habitat 1216 square feet, Skyview 678 square feet. Three beta, Sky Habitat 1760 square feet, Skyview 1141 square feet. So technically speaking, somebody that buys a two beta at Sky Habitat, they can buy a three beta at Skyview. So naturally speaking, the amount of audiences then also shifted to a new era that they want to buy more bedrooms with the same amount of quantum, because since now they can loan lesser, they would rather buy more bedrooms, all right? And of course, 4 beta is quite similar size, but anyway, Skyview has very, very little 4 betas, all right? So what am I trying to share is that this is a similar repeat telecast, because now we're entering into the post-harmonization era after the 2024 harmonization ruling. So because of this, what is going to happen is that we're now entering into a new season, very, 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 very similar to 2013. And you should take advantage of this, because now the pivotal year is 2024. Any projects that is launched after this, the sizes has shrunk. Let's have a look at Penrith. 3 beta start at 786 square feet. And then you have 850 square feet. And then you have 926 square feet. And of course, you have the big one, 10XX square feet. The developers are starting to challenge. And because it doesn't include the AC latch, it gives the developer the luxury to do it without affecting the size too much. So naturally speaking, this is still in and of itself about 800 plus square feet. So you don't really feel it. This is still about 900 square feet. This is still actually about 980 square feet. This is still actually about 1001 square feet, because they take out the AC latch and all that kind of stuff, right? And the year that they actually bidded this was a very conservative year, because 2022 to 2024, we have high interest rate. A lot of developers were very, very conservative. They want to wait and see how does harmonization affect their bid price, because they have to bid for higher PSF. And they want to see how to calibrate the quantum. So that was a year of exploration. So what I'm trying to say is that now we're in 2025. You're actually buying the launches based on the land that is bidded in 2024. As we move to 2026, you will not see this anymore, because the land that is bidded this year is all going to be at above $3,000 PSF, and this is the new norm benchmark. So I would say that based on my personal opinion, let's put a big disclaimer here, all right? My personal opinion and research and judgment and advice is that now, if you can go and hunt for balanced inventory of launches that are still available and that were bidded in 2024 and then launched this year, and there's still balanced inventory, and if you can still hunt for good quantum at the OPSF, so the key kicker word is good quantum, lower PSF, not lower, OPSF, because next year is going to be a new PSF. Why is it new PSF? Let's have a look. Just have a look at the recent land bid price, all right? Likely 2.8 to 3,000. Break-even is already 2,451 according to each prop. Likely 2.8 to 3,002. Break-even is already 2,528 according to each prop. Likely 2.8 to 3,002. Break-even is already 2,460. And developers are land hungry, because this year, market is very bullish. You can see all this news. Naturally speaking, developers want to top up the land bank. Developers are also sellers, all right? So they want to top up the land bank, construct, and then launch, all right? And this is basically the new norm moving forward. So what's going to happen is, I think, Penrith is gone already, all right? So there's no more Penrith left, I think about 15 units. But what's going to happen is that the projects that was bidded in the year 2024, launched in year 2025, this is the last era of PSF that we will see. Next year onwards, everything is going to be a new PSF across OCR, RCR, and CCR. All right, so some things to take note in terms of strategy. Now, next, we're going to talk about money supply. Money supply is growing at a pace that is matching US money supply growth. there's this latest 2024 academic paper that Singapore belongs to one of 5 nations whereby as gold price rise, the residential property prices tend to increase significantly, making the gold price a vital factor that affects property values in Singapore. So there's a strong positive correlationship between gold price and residential pricing in Singapore. Something to take note because gold price has already shot past $4,000, and this is an indicator that our property price is following suit, because these two are the main hot favorites when it comes to parking wealth, parking profit from the stock market, S&P 500, cryptocurrency, or whatever, into a safe haven asset. All right. So something to take note. Of course, we already have 2 rounds of rate cuts. There might be another round of rate cut in December. We're still not sure. Recently, stock market has built a correction. Let me go into this part. So I'm also a little bit afraid for new cooling measures. Now, the key mindset is like this. There's 2 ways of thinking. Number 1, if I'm afraid of new cooling measures, then I can take step number 1 and step number 2. All right. So action A and action B. Usually there's 2 thought process. Or maybe there's even 3 thought process, action C. Let's clear C first. C is let's wait and see and do nothing. A is because there's cooling measure, I think that price will drop, so I shouldn't buy now. Don't buy. Because why? I think that price is going to drop. B is because of cooling measures, then all the more I should take action now. I should invest now. If not, I would defrate myself the chance to invest. Why? Let's take a look at these 3 things. One thing to note is there's already about 17 rounds of cooling measures. The latest round of seller stamp duty. Now, take note, cooling measures started from after Lehman Brothers 2009, 2010. There's no turning back. We cannot remove anything already. We can only tweak the mechanism within it. TDSR will not be removed. This is a fundamental MES regulation that is, the government has hinted multiple times, is structural. Structural means cannot be removed. All right? Things that could possibly be tweaked. What can we tweak? That means if the market is too heated up, if the government want to tweak, they can drop the loan to value ratio from 75%, maybe they'll drop to 70%. Now, when that happens, it will cause a knee-jerk effect in the market a little bit. But people with cash and CPF, they don't care. They can still invest. They can maybe invest in slightly lower quantum, or they just deploy a bit more CPF funds and cash, all right, to form out the 30% down payment and the 5% buyer stamp duty, all right? But definitely, if I think from the B approach, that means I'm an opportunist. Then my mindset is that since I know there's a risk that cooling measures might come in 2026 if the market is too heated up, then might as well I invest now, because it has already proven in and of itself, based on the last 17 rounds of cooling measures, our price didn't come down. Our price was still going up. Let's have a look at this chart. Because it's already very clear, based on all the different rounds of cooling measures, our pricing in Singapore has remained very strong, because as what we mentioned, there's still a lot of millionaires coming in. There's a lot of, let's just have a look at this graph. And we're non-dependent. We're no longer dependent on foreigners. This year, amount of foreigners buying residential property is below 1%. Singaporeans and PRs are the main players of the market. 16 rounds of cooling measures, our price still went up. Through COVID, we implemented 1, 2, 3, 4, 5 rounds, price still go up. Interest rate went up by 11 rounds, our price still go up. So basically, we are a country that is of a different developed nation status. So if, come back to this screen, if I know that, or I feel that there might be a chance that cooling measures might be deployed for the LTV, then why don't I invest now so that I can put in lesser amount? I put in 25% down payment and 5% buyer stamp duty, or it only takes me 30%, rather I put in 35%. So that's number 1. Number 2, TDSR, they can further tweak. For 55% of my income, they can reduce it further to 50%. Now, same mindset, if this is going to happen, then might as well I leverage on the loan right now to secure 55% based on my income to get a higher quantum. Why should I wait until it drops, then I go and take a lower quantum? All right. What else can they tweak? ABSD, second property, but very little people pay ABS. There are some who do that. Second property 20%, but I don't think this will be the one that they will tweak. All right, so I think likelihood will be this guy and this guy. So the same thing is, if I think that there could be cooling measures coming towards the leverage portion, then all the more as an investor, I should be an opportunist to think about the B approach, which is to secure my lending now. All right. Yeah, but the nasi briyani is stuck on my teeth. Okay, great.